Hello, everyone. I'm Chris Kapches, CEO of Chestnut Park Real Estate, and today I'm going to be providing you with the May market report for Toronto and the surrounding region. I think the best place to start is the overall numbers because I think to deal with them is important because on the surface they make the market look much weaker than it actually is. As we get through this market report, we'll drill down a little bit and you'll see exactly why the market is not as moribund as the overall numbers would indicate. If we look at what happened in terms of sales in May compared to last year, you'll see that we're off by about 13%. I'm going to put a chart up that will show you the overall numbers. The average sale price is down by 4%. There's a substantial number of new listings, and then as we finish off the month, we have a huge number of active listings, inventory on the market. Each one of those categories needs to be explained in order for one to have a really in-depth understanding of the marketplace and, in my opinion, therefore appreciate that the market is not nearly as bad as those overall numbers would indicate. First of all, one needs to look at what's been happening during the course of 2025. I'm going to put up a chart for you to see that every single month beginning in January and moving through until we are now in May, we have seen a constant improvement in the number of properties that have been reported sold. So whereas if you look at the number of sales in isolation for the month of May, and particularly if you compare them to last May, there's a negative variance. But the reality is that negative variance has been decreasing every month through the course of 2025. And near the end of this presentation, I'll indicate to you why I believe that is going to continue through the second half of 2025 and ultimately start producing some positive variances, which the market sorely needs. In addition to the fact that the market has been improving literally on a monthly basis. May's results were almost 10% better than April's results. You have to look at how fractured the market is, because it's fractured in, I think, three really significant ways, which I'd like to point out. And categorizing them is easy. The condominium marketplace, the freehold ground level marketplace, particularly in comparison to the City of Toronto and the 905, and then just the overall number of listings, the inventory that we have out there also needs to be broken down so that we have a better understanding as to how this market is operating. First of all, if we look at the condominium marketplace, which really sort of dominates the overall market. We have over 30,000 active listings, which is approaching record highs. I believe there's only been 2 months in the history of record keeping by the Toronto Real Estate Board that have had a greater number of active listings in a given month. If you break that down, though, you'll see that over 10,000 of those listings are condominium apartments. That's a huge number. So they are actually controlling the marketplace, both in terms of sales and ultimately in terms of the average overall sale price. If we extract condominium apartments, we see that the sale prices of ground level properties are actually still very strong. And in fact, they're so strong that they're having a negative impact on affordability. And put up a chart for you that you will see that shows exactly how many sales and sale prices for 416 and 905 for detached, semi-detached, and townhouses. And you see that those numbers are very, very strong. And those numbers are so strong, as I said a moment ago, that they're having an impact on affordability. The other, and I'll call it the elephant in the room, is this issue of inventory. Contained in those 30,000 odd listings are about 21,000 quote-unquote new listings that came to market in the month of May. And I say quote-unquote because almost 40% of those listings are not really new listings. They are, in fact, listings that have been on the market before, didn't sell, perhaps got relisted again, didn't sell, were on the market again and didn't sell, and finally appear again in May. And it swells the number of new listings coming to market, as I said, to record highs over 20,000 listings. The reality is there's not 20,000 new listings that came to market, and therefore there's not really over 30,000 listings on the market. Yes, they're there in terms of their numerical size, but the reality is they've been around for a long time. They've been rejected, and probably for justifiable reasons, overpriced, and therefore of no longer of interest to buyers. So the real number is actually smaller than the numbers reported by the Toronto Real Estate Board. But surely they are big numbers, and that's something we have to take into account. So you can see how fractured the marketplace is, and as a result, when we only look at the overall numbers, they come off relatively negative. But the reality is the numbers are stronger than they appear. That takes us to what's going to happen as we move forward in this fractured marketplace. I think there's probably three factors that are going to play a big role as we move forward into the second half of 2025. And I say that separate and apart from all of the pronouncements that have been made by governments, particularly the new federal government, that's going to pour a whole lot of money into the new construction side of the business. They've made some statements about eliminating the GST for first-time buyers up to 1.5 million in varying degrees. Those will stimulate the market to some degree, but they're going to be marginal, particularly in the City of Toronto and the 416, because you saw from the chart earlier that the numbers for ground level are pretty high, and in some cases might not even qualify for the GST exemption. But separate and apart from that, supply and affordability are going to play a huge role as we go forward, coupled with demand, which to some extent is driven by immigration. So we've got all these factors that are sort of melding together that are moving the marketplace ahead. Immigration is going to come down. It already has started to come down, and we're already seeing that impact, and certainly in the case of the rental market. There's other sectors of the economy that are seeing it as well. But it's going to have an impact in that the demand is going to shrink a little bit. Affordability, we're hoping, will improve for a couple of reasons. You can see that there is a slight drifting down of the average sale price, which again will have an impact on the consumer and their ability to get into the market. We also are looking ahead to see what the Bank of Canada will do. It has stayed relatively stable over the last little while, so we haven't seen any improvements in the bank rate, but we're anticipating some as we move into the second half of the year, which in turn will have an impact, a favorable impact on affordability. Affordability will in turn stimulate the market. By stimulating the market, there'll be absorption of the huge supply that we have, and that in turn will cause the market to churn in a very positive way. So in the second half of the year, we're going to see a substantial number more sales than we did in the first half of the year. I say that, and I conclude this by cautioning that the world needs certainty, and what we did see in the first half of 2025 is uncertainty, anything but certainty. We cannot predict what's going to happen in that regard. If there's uncertainty, it'll cause an imbalance in all of the factors that I spoke about. particularly the demand side. We'll see a pullback by buyers. But separate and apart from that, I'm fairly confident that the market will improve on the basis that I've set out, and that by the time we get to the September market report, we will be reporting very, very favorable figures for the resale market in Toronto and the Toronto region. So until the June report, stay well, and I look forward to providing it to you. Thank you.